Let's check in with the latest exclusive market data with Neil Wilson, editor of TAC Index, the leading global price reporting agency on air freight rates and calculating agent for the Baltic Air Freight Industries. Neil, last month we discussed whether we'd see a typical mini peak ahead of Chinese New Year. So what actually happened?
Well, thanks, Mike. Good to be back on. And to pick up from our conversation last month, we were talking about whether there would be, because you'd seen on the ocean side, rates were rising higher and earlier than normal. And we were looking at whether there might be the same thing on the air cargo side. I guess what we've seen is like a modest bounce. It's not unusual. We talked about last time that obviously you get a big peak in Thanksgiving, Christmas period. You get a more modest one ahead of Chinese New Year when the factories shut down. And that's kind of what we've seen. The rates were falling or flat most of January, and then they rose. If you look at this BAI 00, it's our global chart, they rose just over 4%, 4.1% in the final week of the month through until the 2nd of February. So there was a modest firming up of the market. If you look at the next to the BAI 30 chart, which is the outbound Hong Kong index, it's a bit less visible there. It looks more flat, but that's an average. And underlying that, the spot rates were rising over the last few days. We'll come on to that in a bit. We've got some separate charts to highlight that. And then the other one to look at here that's relevant is the BAI 80, which is the outbound Shanghai, which Hong Kong is number one for air cargo. Shanghai is gaining, also very important. And in that one, we saw a steeper fall in early January, but also a bigger bounce in late January, and ending the month up nearly 9% year on year from where it was before. Among the other things we highlighted last time that I think are worth touching on again is that, different pockets of the market remain strong. Taiwan remains a standout, obviously related to the AI and semiconductor export theme. And so both the Taiwan US and Taiwan Europe routes continue to look strong versus a year ago, up year on year.
Neil, you guys track both the standard BAI indices and BAI spot. Can you explain the difference between them and what they're telling us about the market, or why this is important to anyone making pricing decisions?
Yeah, so this is a good question. So, you've got one set of indices. Why have you got another set? What do they show you? And what I would say is that the reason why we do this is because they show you different things, and when you look at them together, that informs you much more about what's going on. So the existing BAI outbound indices, the global one, the Hong Kong, Shanghai, and others, Frankfurt, London, that we do, they are based on actual airway bill data. So that's telling you really what the average rate being achieved is by the forwarder being paid to the airline. But of course, disguises a multiple range of prices being paid at any one time, because you have a blend of spot and contract activity. And that's what we see. So let's just highlight here. We have our Hong Kong US lane, for instance, which is obviously a very big and important one, maybe less volume than a year ago, but it's still big and important. And that is really showing you the average rate when you run that across the charts. And I'm going to overlay that now with the BAI spot. Now, this is based on a different methodology. And here we have the Hong Kong US East Coast and Hong Kong US West Coast. This is based, it's daily, and it's based on an expert panel methodology rather than actual airway bill prices. So it's major airlines and forwarders on these lanes who are telling us what their price is day by day. And what that's showing, of course, is not the average being achieved, but it's the marginal price for moving something today or tomorrow. And that typically moves more in a more volatile way than the overall index, because the overall index is reflecting a large amount of contract business that was agreed months or a long time ago, where the price doesn't change or it resets occasionally based on benchmarking. So the spot, I think there's often a wide spread between the spot and the overall index, and it tends to show that the rate rises above the average when the market's going up and is below the average when the market's going down. So it's a good market direction indicator, as well as potentially a risk management tool, if you can do contracts based on how it's going to move. So anyway, more on that in future sessions, hopefully.
So we're seeing things tapering slightly into as we enter the holiday period for Chinese New Year.
Yeah.
What's your outlook for the coming month, Neil?
Well, this is interesting. I think there's mixed opinions on what's going on with demand and capacity, and some expecting the market to soften, some expecting it to continue to be tight. We have a post-Chinese New Year period when it's typically quiet, so the factories are restarting. On the other hand, there's this trade frictions going on and potential for sudden changes in trade rules and tariffs and things like that. And what we've seen certainly in the last year or two is that historically can spark short-term demand surges as people try and move things ahead of changes to rules and things like that. So you could get some sudden spikes that are unexpected. Demand, I think, it seems to be softening on the e-commerce side. Maybe other people are telling you that. I think that's probably the case. On the other hand, there are areas like semiconductors which are very strong and other electronics related things. So on the capacity side, we've talked about this before, there's some tightness because particularly on the dedicated freighters, because there's not many more being built, there's backlog on orders and there's a shortage of feedstock. We talked about the ND11s being grounded after the crash last year, and the latest news on that is that UPS, which suffered the fatal crash, has now decided to retire its entire fleet of ND11s. So they ain't coming back. So potentially there's tightness on that side. On the other hand, at this time of year, you look ahead into the summer season, as the summer season develops, you get more passenger belly hold capacity because there's more people flying for holidays and things like that. So that tends to ease the capacity constraints a little bit. So hard to read. The freight capacity is tight. The demand is maybe firm, but not as hot as it was.
And Neil, just to finish, where can people find TAC Index next?
My senior colleague Peyton found TAC Index will be at the IATA World Cargo Symposium in Lima next month. And then in April, we'll be doing our third annual TAC Innovation Summit in Hong Kong, which we always have a little kind of mini event in the week of the Hong Kong Sevens, which is a good time to be in Hong Kong. Thank you.